Hello and welcome back to the complete day trading course by Wealthy Education. In this video, we're going to talk about the cup and handle pattern. The cup and handle pattern is a bottoming pattern or a topping pattern. If you get the inverted version, you almost always hear people refer to the bottoming pattern though. And essentially what it is markets doing this, and then pulling back a little bit and then taking off. The idea is it's supposed to be like a teacup. And what happens is price kind of drifts sideways or does very little, and then it takes off a little bit, pulls back, and then it breaks out. So the downtrend comes like this. Now an uptrend and an inverted cup and with handle looks more like this. Same scenario though. So how do we trade it? Well, we trade it on a break above the handle. We measure the move, the height of the cup, and then we just extrapolate it out. So that's your target. I have a pretty straightforward example here in the Disney 5-minute chart. Most of the time when you hear cup with handle though, you're talking about like a daily chart. This is more of a longer term trader's technical analysis tool, but it does work on short-term charts. You can see that we had bottomed here and we tried to form a cup with handle, just couldn't quite break out. We did it again and then finally did. So at this point, you have a target. You have 114.80 and 115, say 50. So that gives you about 70 cents. So 115.60 would be your price roughly. Then you've got 16.30, which would be your target. And that's exactly where you started the very next day. Now, if you're a day trader, you're probably out at the end of the day, knowing that, you didn't get the last little bit, but clearly you've had a nice move. Cup with handle is a pattern that can be a bit tricky. Basically, the most important thing is you notice that it's like a rounding bottom or a rounding top, and then you get a pullback and then an increase in pressure. It's very similar to a rounded top or bottom. It just has this little bit of a handle where really it almost is like a curved pole with a flag. But nonetheless, it all says the same thing. It says that we are grinding higher and then suddenly picking up speed, which of course is a very bullish sign. Remember to trade the width. As far as stop losses are concerned, a lot of times what you'll do is just put it behind the handle. So in this case, you would have gotten in, say, at 115.60. You would have risked about 20 cents or so, aiming for the larger move of about 70 cents, 80 cents based upon this. Pretty straightforward pattern, very useful. Higher time frames, of course, work better. And it takes so much time that a lot of times short-term traders completely ignore this one, which, is done at their own peril because it clearly does work. It's a pretty well-known pattern. But again, it tends to be more long-term analysis, but you can also use that from your daily setups. You look on a daily chart, you see a cup with handle getting ready to fire off. You put that in the back of your mind, you put in an order, and you follow right along. So either way, you can use it.